Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. First off, I must apologize for the lurid bright red color of my labeling. Every so often my charting system throws a fit and decides to change all the colors on a specific chart I'm working on to another random color for no apparent reason. That being said, yesterday we had an indecisive doji cross, with the base of the action sitting on the flatlining short medium moving average currently at 108 3/4, and the cap was the 50% Fibonacci line of the January 2021 to September 2022 move at 109.44. Above this 50% Fibonacci line is a congestion dating from late April, early May, stretching from the 50% up to the interesting and influential neckline of the July 2017 to November 2018 move, currently at 110.87. And that's highlighted in dark green on my daily chart. Now, the neckline had capped the market in late April and May and allowed the construction of the mid-March to date bull channel, currently 106.84 to 111.49. It's the one highlighted in dark blue on my daily chart. Meanwhile, on the downside, below the flatlining short medium moving average, we have the support of the ever so slowly rising medium moving average, currently 108.23. Overall, we still remain within the March to date bull channel. So far today, well, not much, a little try lower, ever so slightly higher as well, but looking not very much like of anything other than just testing the short moving average at the moment. Cable, aka sterling against the US dollar. An indecisive doji cross yesterday, based around the interesting 50% Fibonacci line of the June 2016 to September 22 move at 126.99. The low stretched just underneath the September 2020 low at 126.72, whilst the high did not stretch that far away from the 50% Fibonacci line. It's an interesting point to note that these two, the 50% Fibonacci line and September 2020 low, had capped the market back in early to mid-May, so they appear significant. Further above, we have the overhead congestion combination made up from the November 2020 low at 128.52, plus a little higher, the powerful looking July 2021 to date optimized downtrend, which you can see angling down in dark blue on my daily chart, and that's currently at 128.85. They are also reinforced by the upper bull channel line, currently at 129.10, highlighted in bright red, though this bull channel is ascending away from the other two. These three resistances together reached their narrowest and most powerful point last week, so if there is to be any attempt higher, then it would seem to be easier as the days go on and they separate even further apart. Meanwhile, below we have the combination of the lower bull channel line, currently at 125.51 at 51, and the very slowly ascending short medium moving average, currently 125.49. Beyond that, the next support will be the slowly rising medium moving average, currently 123.92. So far today, not much, looking like a small indecisive doji cross right now. Euro sterling. A bullish harami yesterday, verging on being an indecisive spinning top as well. And the base of the action was unusually, for a second day, on the flatlining short moving average, currently at 85.77. That's also for today. The market seems to have moved back into the range mainly seen throughout June of between 8600 to 85.45. Overhead, we still have the April 2020 low at 86.69. That's the gateway to higher to an area of congestion that was built up as a rectangle pattern, the half hesitation back in May. And it stretches up to the April 2021 high at 87.19. When we are below the 85.45, 8600 range, the key level to watch out for is the April 2021 low at 84.70. So far today, still in between the short moving average below and the 8600 area above. US dollar against the Indian rupee. An attempted hammer pattern yesterday, with a very long tail on the day's action, stretching down to the end of April / start of May congestion in the 81.65 to 81.80 area. Overhead, we have a very recently built congestion area, roughly between 81.90 to 8200. And further up, we have the very slowly rising long moving average, currently 82.14, Then the flatlining short medium moving average, currently 82.17, and a slowly dipping medium moving average, currently 82.22. The whole action from the middle of June has now elements of a possible bearish halfway cessation. It's not ideal, but it does give you opportunity to look at the 81.50 area, if not as a target yet, then most definitely as an area of interest. Overall, the market is within an April to date roof pattern highlighted in bright red on my daily chart, which is also within a larger October 2022 to January 23 mildly bearish shift pitchfork highlighted in dark green on my daily chart. So far today, well, a small dip lower, but then a reactionary move higher, though we are still within yesterday's range. US dollar against the Brazilian real. An immediate countering bullish harami yesterday after the previous session's bearish engulfing pattern. The action was limited on the downside by the congestion from 2 weeks ago, from around the 50% Fibonacci line of October 2018 to May 2020 move at 477.54, and that stretched down to the 475 area. Whilst on the top side it was capped by the breached lower bear channel line, currently at 480.79, highlighted in bright red on my daily chart of the November 22 to date bear channel. Now, this move up could be seen as another attempt to repair the damage we saw over the last 2 weeks done by this lower bear channel line. But closing right on the breached lower bear channel line, as we saw yesterday, does not exude massive amounts of confidence in doing this. Now, further above is the middle time, currently 484.61 of the broken but repaired late July to late September 2022 bearish shift pitchfork. This pitchfork, highlighted in dark blue on my daily chart, is important as it has shown the bearish angle of attack of this market way before the bear channel was created. Looking below, we have congestion at 472.92 and then the May 2022 low at 468.98. I'll continue to watch the action around this bear channel and the middle time with interest, as sitting over all of this is still the shadow of the monthly key reversal down we saw in January, and now another monthly key reversal down we saw last month in June. US dollar against the Mexican peso. A bearish closing black Maribosa yesterday as the market continues to hang around the previously breached September 22 to date lower bear channel line, currently at 17.0389. We're also still testing the mess of supports made up from the core band of support between approximately 17.0390 and 17.0135, which has as its chief constituent the April 2016 low at 17.0389. Additionally, further down we have the combination of the middle time, currently at 16.8034, of the December 22 to March 23 bearish Andrews pitch, which is highlighted in bright red on my daily chart. And that's supplemented by the lower trend line in dark green of the March to date descending wedge pattern, currently at 16.8089. The lower trend line, which for a while had been just below the middle time, is now mingling in with it. What all this does is show how this market is getting squeezed tighter and tighter between supports and resistances. Now, I have a strong suspicion something's going to give way and in a not too distant future. So far today, more squeezing and testing, this time of the April 2016 low at 17.0389. I'm possibly about to make a new recent low.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.